Is your retirement portfolio struggling? Are you harming your retirement nest egg because you're unfocused and you're investing in too many stocks? Take a leaf out of Warren Buffett's investing success and how it could revolutionize your retirement portfolio. We are about to dive into the world of focus investing, a strategy that has significantly contributed to Buffett's legendary status in the investment community. Focus investing, as detailed by Robert Hagstrom in the Warren Buffett portfolio, is straightforward yet profound. It involves selecting a handful of stocks believed to outperform over the long run, dedicating a significant portion of your investments to these choices, and maintaining your position through the market's inevitable fluctuations. But why adopt this concentrated approach? The answer lies in the remarkable results it can produce, a principle that Buffett himself has leveraged to amass unparalleled wealth. Hagstrom's exploration of focus investing through an enlightening experiment with a database of 1,200 companies showcases the power of this strategy. By simulating 3,000 portfolios each, with varying numbers of stocks, from 250 down to just 15, Hagstrom demonstrated that a more concentrated portfolio often leads to higher returns. This finding was further corroborated when these portfolios were compared against the broader market, with the 15-stock, or focus, portfolios significantly outperforming others. What stands out is not just the potential for higher returns, but the increased volatility that accompanies a focused approach. This volatility means that the value of your investment can fluctuate more dramatically in the short term, a concept that may be daunting for retirees seeking stability. However, Hagstrom's research and Buffett's practice suggest that such a strategy, when applied with conviction and patience, can substantially enhance the growth of your retirement savings. Buffett himself has been quoted saying that with a smaller sum, he would concentrate his investments heavily on a few positions, demonstrating his belief in the power of focus. Yet, this strategy requires not just financial acumen, but emotional resilience. Many of the portfolios that succeeded in Hagstrom's experiment faced years of underperformance before their eventual triumph. Now let's dive deeper into understanding how focus investing can be a game changer for those in or approaching retirement. The essence of focus investing lies not just in selecting stocks, but in the profound understanding of what makes these stocks outperform in the long run. It's about quality over quantity, where your investment choices reflect a deep dive into the fundamentals of a business, its growth potential, and its ability to navigate through economic cycles. Warren Buffett's success with this strategy is not by chance, but a testament to his meticulous analysis, patience, and conviction. For retirees, applying these principles means moving beyond the conventional wisdom of spreading investments thin to mitigate risk. Instead, it's about concentrating on a few, well-researched investments that show promise of robust growth over time. This requires a shift in mindset from playing it safe to being strategic about where you place your bets. One might wonder, how does one go about selecting these golden stocks? The answer lies in diligent research and analysis. Look for companies with a strong competitive advantage, often referred to as a moat by Buffett himself. These are companies that have something unique that sets them apart from their competitors, be it a patented technology, a strong brand, or a dominant market position. Next, evaluate the company's financial health. A strong balance sheet, consistent revenue growth, and good cash flow are indicators of a company's ability to sustain and grow its business. But it's not just about picking the right stocks. The timing of your investments and the duration for which you hold them play a crucial role in focus investing. Market timing is notoriously difficult, even for seasoned investors. Therefore, the emphasis should be on time in the market rather than timing the market. This means investing in stocks to hold them for a long period, allowing your investments to compound and grow. This strategy aligns well with the retirement planning horizon. As retirees or those nearing retirement, the goal is to ensure that your investments provide a stable and growing income over the years. By concentrating on a few high-quality stocks and holding them over the long term, you are more likely to see your investments withstand market volatility and generate significant returns. However, focus investing is not without its risks. Concentrating your investments on a few stocks means that your portfolio's performance is closely tied to the fortunes of these companies. A downturn in one of your chosen stocks can have a significant impact on your portfolio's overall value. Therefore, it's essential to continually monitor your investments, stay informed about the companies you're invested in, and be ready to make adjustments as needed. Risk management is a critical aspect of focus investing. One way to mitigate risk is through diversification within your focused portfolio. While the idea may seem counterintuitive to focus on investing, it's about finding a balance. Investing across different sectors or industries can provide some level of protection against sector-specific risks. Additionally, setting aside a portion of your portfolio for more conservative investments, such as bonds or fixed-income securities, can provide a cushion against market volatility. For retirees, the ultimate goal of investing is to create a portfolio that provides financial security and supports a comfortable lifestyle. Focus investing, inspired by Warren Buffett's success, offers a pathway to achieving this goal. It emphasizes the importance of quality over quantity, the value of deep research and analysis, and the virtue of patience and conviction in your investment choices. This approach underscores the importance of conviction and patience. Investing a significant portion of your portfolio in a few well-chosen stocks and holding onto them through market ups and downs can lead to substantial rewards. Focus investing is not without its challenges, and it requires deep research, a thorough understanding of the businesses you're investing in, and the fortitude to withstand periods of underperformance. Consider your own financial goals, risk tolerance, and investment timeline when deciding how focused your portfolio should be. Remember, while focus investing can lead to higher returns, diversification within your chosen stocks is essential to managing risk. If you need help, engage the help of a successful financial advisor with a strong track record of getting consistent good returns for their clients. As we conclude, remember that the secret to Warren Buffett's investing success is not just about selecting the right stocks, but about the conviction to stay the course through market turbulence. For retirees, this strategy offers a path to not just surviving, but thriving financially during retirement. Embracing Buffett's principles means understanding that true investment success is measured over decades, not days. It's about recognizing the intrinsic value of a business beyond its daily stock price fluctuations, and having the discipline to remain invested even when the market seems to turn against you. This approach requires a blend of patience, research, and resilience that can ultimately lead to a more prosperous and secure retirement. By adhering to these time-tested principles, retirees can navigate the complexities of the market with confidence, ensuring a financial foundation that supports the retirement lifestyle they've worked hard to achieve. Thank you for watching. If you found this video insightful, please like and subscribe to The Smart Retiree for more tips on securing a financially sound retirement. Your journey to financial freedom starts here. Share this video with family and friends. If your retirement portfolio needs a little inspiration, take it from the investing genius of Warren Buffett.